Taiwanese index is down around 0.1%.
Tomorrow, they will be implementing the free float changes as far as Adani Group securities are concerned.
I'm optimistic about inflation coming down.
Absolutely flat for the Nifty. 17,850 is where we're at.
India will probably need to go through another year of consolidation in 2023. Multiples for the index, multiples for a large set of stocks are still higher than average, still higher than where they were in December 2019.
Revenue is up 11.5%.
As far as emerging economies are concerned, there's a bit of a paradox when the United States economy is doing well.
Markets were absolutely flat on the benchmark index right now at 11 o'clock.
As long as the economic outlook for the country is in a good space, mutual fund investors put in money.
We have beaten all competition on the budget day with a whopping 88.2% viewership during the finance minister's speech.
Nifty has recovered from the low, so it's down 15 points as we speak.
Well, that was the day so far. Hello and welcome to a fresh new edition of Closing Bell. I'm Prashant. With me, my colleagues Rima and Nigel. Guys, hi. We're coming to you, of course, from the CNBC-TV18 Motilal Oswal studios. Hindalco numbers are flashing at the bottom of the screen and Nigel is looking through them. We'll have more details in terms of a take in just a bit. But I want to start with what's happening on the market. Actually, in many ways, what you're seeing now is pretty much similar to what we saw yesterday. Actually, even the levels are similar. You just go back and look at where the Nifty was at 230 and where the Nifty is now. And I think it's almost exactly similar, maybe 5-6 points here or there. Even yesterday we were kind of wondering whether, the market will power through a little bit more and have a nice close above the 20-day moving average. It did not do that. It actually pulled back about 30 points or so. Today, we are again once more at the 200-day. We're up above the 200-day by about 15-20 points or so. Sectorally, IT is doing well, and this is a continuation from what we saw yesterday. Yesterday, IT, pharma, metals were the three areas which saw maximum gains. Today, IT is continuing, but metals are taking a bit of a knock. The sector is down about 1.2, 1.4%. Mid-caps and small caps are absolutely flat. Advanced decline is largely 1:1. And of course, the big news flow later today is not from global markets really. It's not from US markets, but it is, all eyes on MSCI review, the Adani stocks and what that might throw up. And of course, the markets here will react to it very keenly tomorrow morning. Rima, hi.
Hi, and in the last 30 minutes, we've seen a big recovery in the banking names. So the Nifty Bank has pulled back nearly 300 points from the day's low, is now flat, while the PSU Bank has also recovered 1.8% from the day's low, and that's currently in the green. So just pull up the Nifty Bank and the Nifty PSU Bank. Today is also the weekly options expiry. Life insurance companies have made quite the comeback post the budget. Remember, on budget day, they got slammed. For the next 2 days, also, they were under pressure. And now from the post-budget lows, HDFC Life and SBI Life have recovered close to about 10-odd%. So pull up that 1-week chart of HDFC Life and SBI Life. And SBI Life, in fact, it's been close to a 100 rupee up move. And even on HDFC Life, the post-budget low was around 480. And now the stock is at 520 thereabout. IT has been doing well, as Prashant pointed out. For today, for this month, it's up 4%. This year so far, it's rallied close to about 8.5%. Infi TCS leading the charge over there. Paytm, that's clearly the stock of the day, the stock of the last couple of days now. Pull up the intraday chart of Paytm, the 1-week chart, and you would see the kind of buying that's come through. In fact, Paytm as a stock price in the last 4 or 5 trading session has added close to 200 rupees. The low was around 500, 520, and from there it's now inched towards the 720 mark, and all eyes will be on Zomato as it releases its numbers later today, and the path to profitability is going to be tracked very closely. IRCTC numbers also up for your new screen. Interim dividend of 3.5 rupees and a top line growth of 70%. But Nigel had a look at Hindalco's numbers.
Hindalco's numbers are good actually. The aluminium business, you need to look at the downstream and the upstream business together. And the total between both of them, that is the total EBITDA numbers, coming at around 1,748 crores. So that's much better than what the sheet was going with. So that is a thumbs up out there. You just need to look at 3 broad numbers for Hindalco. One is on the total aluminium EBITDA, so that's coming better, 1,750 crores odd. Even the copper business, out there it's come close to around 550 crores odd, which is better than what the sheet was working with. We were in the vicinity of around 510 to around 520 crores odd. The higher amount of CC rod sales, that's the value-added sales. That's at around 88,000 tons. which is much higher, 25% higher on a year-on-year basis. So that's what's helped them out there. So aluminium better, copper better, and the debt number we already had, the Novelis numbers that did come in there. But in spite of at Novelis, the debt went up by close to under $100 billion. They're seeing the consolidated debt, the net debt, has come down marginally by close to 300 crores on a quarter-to-quarter basis. So that as well is quite encouraging. So these numbers, though we had bulk of the numbers coming in from Novelis, which was disappointing, that's 70% of the EBITDA. The remaining India business, that's a beat on aluminium, beat on copper, and little lower debt as well. Management commentary will be very, very keenly awaited. We'll speak to them later today and we'll play that out for you tomorrow.
Thank you very much for that. Let's tell our viewers now what we've lined up on the show. First up, we'll be discussing the Adani Group stocks, which are under pressure after MSCI says it is reviewing the free float of the Adani Group stocks. Jonathan Sheasel of Westminster Asset Management and market expert Dilip Bhatt will also join in to discuss the details on the Adani Group crisis. We'll be joined by Pashupati Advani of Global Foray for some market talk. We'll bring you Q3 earnings expectations from M&M and Zomato.
Okay, well, how should you position yourself in this last hour of trade? Mitesh is with us for a quick comment. Mitesh, hi. How are you looking at things? Will we get that push through or still, significant resistance? What's your sense?
Good afternoon, Prashant. So we've maintained a positive bias, and despite some choppiness in the first hour, I think the overall, structure has been pretty positive. I think I had just heard Rima talk about IT stocks, and that's where I think the focus is, because that's a sector which has corrected a lot in the last 3 to 6 months and now is showing good signs of reversals. We've had buy calls there earlier as well. Even now, I got 2 buy calls from the mid to large cap IT names. Oracle Finance, that's a buy. Keep a stop around 31.75. Look for targets of 32.60 on the upside. And Info Edge or Naukri, that's breaking out as well. That's a buy with a stop just below levels of 37.85 and a target of 39.20 on the upside can be.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's focus on the Adani Group of stocks. Now, they are in focus following the notification coming in from the MSCI earlier today. Nimesh is joining us to fill us in with all we need to track. Nimesh.
Hi, Nigel. So, as you rightly pointed out, so all eyes will be on the MSCI announcement, which will come today late night. So, India market will get to react tomorrow. Now, what has MSCI said with regards to Adani Group? Today, they made a release saying that, the certain investors' holding will not be considered as free float, and that, will be reviewed and implemented. Now, which are the stocks which are part of the MSCI Global Standard Index as of now? That includes Adani Enterprise, Adani Port, Adani Total Gas, Adani Green, Adani Transmission, Adani Power, as well as ACC and Ambuja. They are part of the MSCI Global Standard Index. The 2 stocks which are not part of the index are Adani Wilmar and NDTV. These are the stocks which are not part of it. Now, I was just looking at the shareholding pattern and which are the stocks which might get impacted and which are the stocks which might not get impacted because of this MSCI ruling which can come tomorrow. Now, if you look at the shareholding pattern, there are some stocks which are well diversified as far as the institutional holdings are concerned. The first one is Adani Port. If you look at Adani Port's holding, the promoters own 65%, mutual fund 4%, LIC 10%, and FIs own close to 13.5%. So it's well diversified between promoters as well as the institutions. Similar is the case with Ambuja as well. After Adani took over, their stake is 62.3%, mutual fund owns 7.8%, LIC 6.6%, and FIs own 10%. So again, well diversified as far as institutions are concerned. Similar is the case with ACC as well. There, the promoter holding is close to 57%, mutual funds own 8%, LIC owns little over 6%, and FIs own little over 11.5%. So again, well diversified. The problem which might get, and the stocks which might get impacted with the MSCI ruling tomorrow is where there is a concentrated holding. And if you look at those stocks, the first is Adani Enterprise. If you look at Adani Enterprise, the promoter holding is 72.6%, and out of that, out of which, apart from that, mutual fund owns 1.2%, LIC owns 4.4%, and FIs own 15%. So it's a very concentrated holding between FIs and LIC. So that's Adani Enterprise. Similar is the case with Adani Transmission as well. The promoter holding is as high as 74.2%, LIC 3.6%, and FIs close to 20%. So again, a well concentrated holding in that group as well. Even in Adani Total, the promoter holding is close to 75%, LIC close to 6%, and FIs own 17%. And again, it's very, very concentrated. So that's with Adani Total Gas. Look at Adani Green. Even in Adani Green, the promoter holding is 65%, close to 60%, but their total ASA owns 16%. So Combined that, 76% is within the promoters, LIC 1.2 and FI is on close to 15%. So again, very much concentrated. Same is with Adani Power. Promoter owns close to 75% and the FI is on 10%. So the 4-5 cash stocks where there is a high concentrated holding and what MSCI has alluded to, these are the stocks which might get impacted. But clearly from the diversified holding, ACC, Ambuja and Adani Ports are the stocks where I don't fear there could be a big risk of MSCI changes.
Well, that's right. And the new promoter just took over.
Exactly.
So the shareholding would not have changed that much as well. So ACC and Ambuja, and we'll get to Ambuja Cements in just a bit. For the time being, let's hop across to Vivek. He's joining in to tell us what analysts are making of MSCI's statement and the potential impact it could have on the Adani Group stocks. Vivek?
Well, absolutely right. So largely in line with what Nimish just mentioned, there are a few stocks that are unlikely to be impacted. So what we did is we actually spoke to a whole host of analysts who are quant specialists and who track the MSCI indices and the potential impact quite closely. So what we understand is that this is the likely impact that could come after tomorrow's statement. So Adani Enterprises, there is a likely potential sale of close to $180 to $200 million of outflow, which is equivalent to 1 to 3 days of the average traded volume or average daily volume. When we're talking about Adani Total Gas, a potential sale or outflow of close to $100 to $120 million between 13 to 17 days of the ADV. And Adani Transmission, a potential sale of close to $160 to $180 million, which is 12 to 14 days of the ADV. Now, the other stocks that are part of the index but which are unlikely to be impacted, at least in the Feb index review, are Adani Ports, Adani Green, Adani Power, Ambuja Cement and ACC. So they believe that at least in the Feb review, these stocks won't be impacted. But again, MSCI could have a relook at these stocks and their weightage within the MSCI Global Standard Index come the May review.
Vivek, just on the three names that you mentioned, right, and those numbers that you put out, what is the basis for analysts to put these numbers out? Because I mean, how are they kind of coming up with these numbers?
Well, the first thing is what they're actually having a look at is the fact that what is the total holding or what is the tracking as per yesterday's close, and today there's been quite a bit of volatility. So what they've actually looked at is yesterday's close. So with that, what they've done is they've taken a weightage or a reduction factor, in some cases 25 basis points, in some cases 50 basis points. Now, what quant analysts are telling me is that there's no real precedent to this particular move. So, they couldn't take anything particularly, or they couldn't take a factor of, let's say, 25 basis points or a 50 basis points reduction because there is no precedent. So what they've done is they've used their judgment in this particular factor, and that is why we are getting a range for the outflow figures that could happen come tomorrow. But there will be clarity on this, come MSCI's announcement tomorrow.
Okay. All right. Vivek, thank you for that. That's an important point. I mean, even as you see those numbers up on the screen, it's largely like a qualitative judgment which these analysts are making. So we don't know. I think that's the, we'll have to wait for MSCI in terms of what they do. Jonathan Sheasel is with us, Deputy Chief Investment Officer at Westminster Asset Management. We also have Dilip Bhatt joining in, market veteran. Great to have both of you here, gentlemen. Appreciate your time. Jonathan, if I can come to you first. You heard, my colleagues Nimesh and Vivek kind of outline the MSCI related issue and what is expected later. We don't know what is expected, but we know there is an announcement to be expected. How are you looking at this whole thing? And if you can give us a broad sense, how important is these changes by MSCI? How important have they been historically? Go on.
Yeah. Hi, everybody. Look, it's the saga continues, obviously, and in many respects, I guess you could look at this and see perhaps there's some vindication in some elements of the short sellers report, and hence MSCI is catching up from perhaps what it should have been doing all along, if this is indeed true. We've tended not to get too het up with MSCI news of this sort of matter. Markets tend to price it in, very quickly, and that's exactly what we've seen today. Market pricing in potential, how many days selling needs to be happening, etc. So we tend to find that markets already have moved before you have a chance to do much before that. And obviously passive investing has been massive over the last decade, 2 decades, and there is a huge amount of money following these things. But from an active perspective, tends to throw up opportunities sometimes. But yes, it's news that we don't tend to get to head up with.
Dilip Bhatt is also with us. Dilip, could you give us an indication of the retail investor perspective and what is happening in the markets right now? Because many retail investors had jumped in the Adani bandwagon and they've ridden on the way up, but it's difficult to get out. Can you tell us what's happened with the retail investors in the last one week?
So I think the retail investors actually, probably all of them really are not very smart enough to get out, because once it falls in a big way, you always have that hope. So I'm sure a lot of them are still stuck up in this because they have seen the higher end, and generally the retail investor, the psychology is not to book or not to get out when it's coming down. And that's typically been the reaction of the retail all along. So I think as far as that is concerned, Adani is concerned, I think there was not really any great retail participation, or apart from those core FIs, not really great participation from FIs or DIIs, except for one or two, which is very, very well known. So in my opinion, and since this rumor has been floating for quite some time now, based on that research report, so I think a lot of it is in the price. So I wouldn't be, I'm not really too apprehensive about this. Whatever decision they take, I don't think it will turn out to be anything greatly negative.
Okay, all right. Gentlemen, request you all to just hang on. I just want to apprise our viewers of, the analyst call that was held yesterday by Ambuja Cements Management, which is now the Adani management. And in fact, let's run you through the broad pointers out there. They said they're committed. The big headline when they took over was they're going to double capacity. They're saying we're going to go by that from 70 to around 140 million tons odd. But though they didn't highlight how much of it will be organic, how much of it will be inorganic. So that's point number one. Second factor is everyone's wondering why they're making advance payments on coal. They clarified out there. They said that yes, we have made advance payments, but it will be at a lower cost. So there'll be some cost savings. And they further went on to clarify that no, it's not from a group company. It's not a related party transaction. Some part of the street, well, they took it, but there were a lot of counter questions as well. That who was this, advance money paid to? That remained a little bit unanswered. They clarified though on a couple of other aspects. Some were wondering whether or not, since the Adani group could be in a bit of a spot of bother in the near term, they're asking, will you introduce some royalty payments? They clarified no. As of now, there's no proposal to put any kind of royalty like what the erstwhile promoter Wholesome did. And also they said there's no merger on the cards, at least as of now, because there would be some synergy benefits that could come out. But they said as of now, they are working on operational efficiency, but not on a merger. They also highlighted that they're looking on waste heat recovery systems, alternate fuel usage and all, which will help margins. And they say margins will go to 4 digits, which is good. You will have more than 1,000 rupees EBITDA per ton, and that's their focus point. But they're also talking about a big capex of around 10,000 crores, which will be spent on the efficiency enhancement program over the next 18 months or so, which is quite a large number, but it's interesting to see how they do that. The management, they said, let's take all queries only on the cement business. Let's not talk about the promoter entity. Some people wanted to know about the Adani group. Finally, Jefferies, well, they are a brokerage that have gone ahead and tweaked their estimates, so we're highlighting them. They maintained their buy, though they've slashed the target price around 490 rupees odd. They've cut their multiple as well. Earlier, they upgraded the stock and put a multiple of around 16 times. Now, they've drawn it down to around 14 times. And they're factoring in a 12 to around 14% cut in EBITDA because of the likely volume underperformance in the near term and also pricing pressure for the entire industry. So that's about Ambuja Cements. Well, Jonathan, I just thought we'll highlight our viewers about Ambuja Cements and, what they did on the con call yesterday. But some part of the street was fearing that maybe there'll be a deletion from MSCI, which has not happened. So scaling back is okay. So do you think some part of this bad news is already factored in the last few days as well? Some part of that selling would have already taken place?
Undoubtedly, yeah, I totally agree with that. I mean, obviously markets react quicker than ever now to any news flow like this. And it's very difficult to try and get ahead of the news. So yes, I think a lot is factored in, but clearly there's still potentially more news flow to come out at some stage. So there is a certain degree of, I think, caution warranted still surrounding some of these names. And I think investors have got to expect volatility to carry on for some time.
Okay, so that's the Adani saga. Jonathan, how are you feeling about the market overall? It's been biding time, and will we see a decisive break, higher or lower, in your opinion? And what are you watching? Yeah.
Yeah, so I mean, clearly India's come off the highs over the last, month, 2 months. some of that money has definitely, from an FII perspective and a passive flow perspective, shifted to the likes of China, which is obviously reopening as such. But I think medium to longer term, India's fundamentals still look very attractive, and there's still a lot of very good companies that investors can look at to invest in. But in the short term, I think clearly the market, or a lot of global houses are focused on what is going on interest rate policy. Is for example, the US Federal Reserve going to pivot their views, et cetera, and that is having quite a profound impact on the dollar, which traditionally has had quite an impact on emerging markets. Obviously, emerging markets had done very well over the last couple of months. We're sort of seeing a little bit of a pause as the dollar's strengthened. But I think the class, and certainly India, will still attract flows going forward, and that will benefit India. But I think dedicated emerging market investors, probably in the short term, will be looking to China and potentially elsewhere in the very short term. But the outlook for India still looks attractive. Obviously, valuations have come down a little bit, but we still like the look of India.
Jonathan, in the past, you've said that you like the Indian financial space. And the Indian financial sectors and the individual constituents have corrected in the last 1 week due to the linkages with the Adani Group. Have you used this as an opportunity to buy more shares? If you could just tell us, what has your portfolio done? Any ins, any outs?
No, not really. We tend to be quite inactive. We've just focused on the large cap space and the private banks. Yes, you're quite right. Some of them have certainly come off. I think HDFC Bank has barely budged, obviously hasn't reacted to this news at all, whereas some of the, like ICICI has certainly come off a little bit. But Indian financials remain a fantastic way to get access to a very broad scope of industries within India. It's not just financials. You're clearly getting access to consumer and a whole bunch of other sectors when you're looking at Indian financials. So they still look very attractive. But broadly speaking, we've not made any changes. We don't own any public sector banks. We just focus on a couple of private sector banks.
Jonathan, thank you very much for joining in. Then one more question. The sector which seems to have turned the corner are these new age technology companies like Paytm, Zomato. While growth was never a challenge for them, the big difference is now these companies are focused a lot on cash flow, on profitability, and that is what is dominating the management's mind. Does that make these stocks attractive to you? They've started running up quite a bit, but they're significantly off from their peak levels. Would you look at buying any of them?
Well, I think as a momentum play, certainly one can look at some of these stocks, because the way Zomato, the way Paytm have said some of the things, I think the wind seems to be blowing in favor of a little more visibility for the profits and more visibility for the top line. Top line, of course, was never an issue, but more important is the cash flows. But I think still, having said all that, it's very difficult to value as far as all the stocks are concerned, and we still remain very clueless as to how to value some of these stocks. So as what I said, at best one can take a momentum play, but more than that, to take a proper fundamental call on a long-term basis, in my opinion, is very nebulous and a little more hazy. So I don't think I'll be in a hurry to buy any of these stocks in the portfolio.
Dilip, thank you very much for joining in. Don't know if it's an indication, but Zomato has suddenly slipped from the day's high. It's off about 3.5% from the top right now, and it's just about holding up in the green. 1.5% gain on Zomato. Let's get that intraday up for you on your screen. But on that note, we'll slip into a break. But as we do that, we would like to thank our viewers. Once again, we've beaten competition on budget day. It's a whopping 88.2% viewership during the finance minister's speech, and an 89.8% viewership throughout the day on the 1st of February. So a big thank you to all our viewers for your continuous trust and patronage and keeping it with CNBC TV 18. Indeed, a very proud moment for all of us here. Welcome back. Still flat on the benchmark index. The Nifty is at that 17,890 mark. Lots happening below the line. Take a look at Page Industries. That slipped more than 3%. Selling pressure picking up after the company reports a big decline in their margins. The EBITDA margins have fallen from 21% to less than 16%. That's more than a 500 basis points decline seen in their margins, and that's driving a 30% drop in the company's profitability. There you can see the stock nosediving, now down close to about 3%. Another one which just reported numbers a while back is Suzlon Energy, and here the numbers are looking good. At the bottom line, the company's profits have come in at 78 crore, which compares with 38 crore. Just a 9 rupee stock, but you can see the stock pick up a bit on volumes post the numbers. But let's talk also about Piramal Pharma. That's under massive pressure after the company reported a weak set of Q3 numbers. There was a big margin miss. Ekta joins in to tell us what went wrong. Ekta.
Thanks for that. Well, yeah, the piece of news, or the positive piece of news with regards to Piramal, is that they have approved a rights issue of around 1,050 odd crores. But the stock is down in double digits because it was a clear miss when it came to its numbers. Revenue was up around 11.5% on a year-on-year basis, but the margins have come in just at around 5.1% versus 14.7% year-on-year. And the loss has come in at 90 crores versus a profit of over 160 crores same time last year. Q-on-Q as well, the margins have dipped 500 basis points. Loss has widened on a sequential basis. 9 months margins at 6% versus 12%. Loss at over 230 odd crores. Now, in terms of the revenue, it's not really a revenue problem as much as it's a margin problem this time. Yes, the CDMO segment has been facing headwinds. It was up 14% this quarter on a year-on-year basis, so some recovery there. Complex generics was up 6% year-on-year. Consumer health was up around 37% on a year-on-year basis. The company also has a very strong track record when it comes to the US FDA. But overall, that has not really enthused the stock at all. The stock, in fact, is down over 50% from its issue price in October, which was at around 200 odd rupees. Remember, it's the demerged section of Piramal Enterprises, the demerged pharma section of Piramal Enterprises. Interestingly, a lot of brokerages had also written on Piramal Pharma post the listing. So, for example, Axis Cap had initiated coverage with a buy, target price of 160. Similarly, Jefferies too had a buy with a target price of 150. There is a conference call which will be held at 5 p.m. this evening. I'm sure a lot of people are going to tune in to know more.
All right, Ekta, thanks very much for that. You know, Page Industries numbers do seem quite subdued. Revenues are flat. I mean, they're up some 2-3%. Profits are down some 28-29%. And EBITDA is also sharply lower as compared to the same period last year. Those are numbers on Page. We'll have more details with our research team in just a bit. Stocks down about 4% or so. These numbers look pretty poor. Nigel, you have more?
Just one more point on Page, Prashant. You know, we are looking at the numbers and we're comparing it on a year-on-year basis. But even if you compare it on a sequential basis, the previous quarter they gave margins of 19%. You know, so it's down by close to around 300 basis points on a sequential basis, which is a bit of a worry. And I think that's the reason why the stock is not seeing any kind of recovery. On a year-on-year basis, is looking very, very disappointing. But I'm looking at the past many quarters, and I haven't seen margins in this mid-teens, you know, since the pandemic period. So one of the lowest margins is what we're seeing at around 15-16%. I just thought I'll put that point across, that on a year-on-year it's looking subdued, but even on a sequential basis, margins have seen a sharp decline.
No, absolutely. Thanks for that. Helpful, Nigel. You know, we had, by the way, Page Industries was part of our sort of segment, Market Laser. This was, I'm just looking at it was on the 14th of December. It was some 47, almost 47,000 rupees back then. It's lost 10,000 rupees since. I mean, it was basically a significant technical break. And is down full 10,000 from that point on. So it's coming pretty fast. And these numbers don't help us. We've been pointing out 4.25% lower on Page Industries. Pashupati Advani is with us of Global Foray. Pashupati, good to have you with us here. Thank you very much for your time. You know, the market's really not running away in either direction. And numbers, as Page shows, are not kind of putting the focus on Page here, but just using that as an example. This quarter has actually been pretty disappointing in terms of what it does to FY24 estimates, etc. So there is no earnings support in that sense for the broader market. Would you agree?
I would say that this is not a phenomenon unique to India. I think this is happening all over the world. Every country in the world is exhibiting some slowdown in certain sectors. And obviously, some of the contagion has to come to us, which is why we are seeing certainly the second-tier players who are giving their results now, giving subdued earnings, as you call it. And that's obviously going to translate into subdued market. And I think that's the phase that we're going through. So, at the beginning of the quarter, the heroes reported good numbers and we were exuberant, but now we're getting further into the quarter and now people are you're getting indifferent results. And you're talking about page industries. I guess if people want to buy underwear, they're putting off their buying decisions. So that's the first sign of a recession. So that makes life interesting.
Okay, all right. Hi, Mr. Advani. Good afternoon. Nigel on this side. Well, the biggest news point that we've been focusing on for the last couple of weeks has been the Adani Group. Some of those stocks, as you would know, and we have been talking about it, they have value in the business in terms of free cash flows, their balance sheet, the core business as well, ports, the cement assets. Have you bought into any of these names?
Honestly, not yet, for the simple reason that one of the things that's happened is that a lot of people borrow against against shares generally in the market, and 3-4 of the larger Adani names are on those lists, and all the banks are pulling back. So typical of that would be obviously Adani Enterprises, which is in the Nifty, and also ACC, which is I believe a couple of the larger banks have taken it off their borrowing list, and that kind of throws people into a bit of a tizzy, because if you can't get the leverage, and of course they're getting pushed out of industry. So I think every time one of those events happens, it's going to affect the stock. I mean, you say on the way up that a stock gets liquidity when it gets added to an index, a stock gets liquidity when it's added into F&O. It looks like a lot of the Adani stocks are going to come out and do the reverse. So obviously that's showing in the prices. So it's a bit of a wait and see. Overseas, there seems to be some interest in the bonds. As you mentioned, these companies seem to be doing well in cash flow. So, there are a lot of people saying, okay, let's buy Adani Ports bonds and see, because the ports business is a proper operating business with good cash flows, and taking a shot at it, because those are trading at 10-11% yield in dollars for 2027, 2028 paper. So there are people looking in that space. Nigel?
Pashupati is saying that if people aren't buying innerwear, it's a clear sign the recession is coming. So if a recession is coming, are you foreseeing a big decline in the Indian equity market? And would you increase your cash position right now? What have you done with your portfolio in the last 2 months?
So I've actually been in cash and missed a lot of the rally on the way up. So I'm not gloating. I still don't think it's time to dive in with both feet. But I think that there is caution. I mean, I am looking at buying stocks which have high yields. I think it's really back to basics. So some of the PSUs that have high yields, I have taken nibbles on the way down. But I think that this is a time for caution. If I said to people, if you make money in equities in 2022, very few people did. 2023, I think it's going to be the same story. So yes, you will make money if you hit specific dots, and that'll be great. But in general, if you're in the market, you'll be hard pushed to make a return like you've had in, say, 2019, 2021, where things have actually been very good.
Okay, all right. Just one more point, Mr. Advani, Rima and Prashant. Just look at HAL's numbers, and I think they should flash for you on the screen. But the margins have seen a severe compression. It's come in, I think, a little lower than the 20% odd. We should have that up, and these numbers are looking a little bit disappointing. That's why initially, the stock was trying to find its way. But clearly, there is a miss out here, because on the top line, there's a bit of a degrowth, and the margins, I think, if I've got that correct, I think it's come in sub that 20%, which compares with around 31% in the previous quarter. Even on a year-on-year basis, it's a sharp decline. It compares with around 24% also. The last 10 minutes or so, we have had a couple of margin disappointments, and Page as well as HAL, both of them, I think we should focus on the margin number out there. HAL, those numbers are looking quite disappointing. We'll try to find you the reason why, but for the time being, the stock has seen a considerable downtake from the top. Just thought I'll point that out, guys.
Hindustan Aeronautics has not reported sub 20% margins now for 5 quarters in a row. The last time its margins were sub 20% was in June, Q1 of FY22. So clearly there is a bit of a miss that you are seeing quarter on quarter and on a year-on-year basis. on the margin performance. And this is a stock which has rallied so much. It's been such an outperformer in the last 1 year. Hindustan Aeronautics is up close to about 70-odd%, right?
I mean, we'll have to see if there's any one-off or anything. But Nigel, if you remember, HAL was with us in the beginning of January, and they had actually raised their margin guidance.
Yes.
You know, the margin guidance was between 24 and 25%, and they'd said that we're raising it to between 26 and 27%.
Yes.
So this is just in January. So, I mean, they already knew how the quarter ended December went. So in that sense, this is perhaps even more jarring more than anything else. As we're saying, we'll get you more in a little later with our analysts. But HAL on your screen, 2360 or so is where Hindustan Aeronautics is at right now. Pashupati, any thoughts on names like HAL? The defense space has done very well, and for good reasons. But of course, I mean, this quarter numbers notwithstanding, what's your view?
I think one has the opportunity to make money in defense. You know, my mantra is that we're going to be pulled towards kind of the so-called new industrial revolution by the government doing spending. Now, whether it's done for defense or it's done for roads or it's done for other infrastructure, that's going to drive everything else, it looks like. So I think that certainly one should be looking at defense stocks and seeing. Plus, we are rattling sabers at China, so I don't think. It probably is a good place to come in and look at certain defense stocks. Plus, being PSUs, they tend to have higher yields, so that's another thing. So if you've got a combo of being a defense stock, being something the government needs in any kind of saber rattling with the Chinese, and paying a high dividend, those are the ones to look at. So we'll get the search engines out to do that, and now we've got ChatGPT to do it for us.
Pashupati, we'll leave it to that. Thank you very much for joining in. By the way, Zomato has now given up all its gains and is completely flat. In fact, it dipped into the red as well, but now just blinking red and green. Get into a break. On the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. We'll also get you some technical calls by today's Sell Tomorrow calls.
Welcome back. Well, the markets are up close to around 25 points as we speak, so it's a good time to shift focus to D Street Chatter. Nimesh is back with us. Nimesh, what are you picking up in terms of flows?
Nigel, not a bad outcome, so to speak. Been volatile for the last few days. Today looks slightly better off. The flows are mixed, but with a positive bias. And there are some pocket which is doing good today. So the overall feedback is, while the flows are mixed, there's going to be a small market at close buying basket in some select nifty names. It's not like a very large buying, but that's something which I got the feedback in the morning. In terms of sectors, financials and insurance, these are the two sectors which stands out in terms of well bid by the institution. So that's where there seems to be some interest. What is interesting is going to be the MSCI rebalancing, which will get announced tonight, which India market will get to react tomorrow. We extensively spoke about the Adani Group stocks. There is an expectation of Bank of Baroda getting added and Biocon getting deleted. So that's something, I guess that street knows. Yes. But what I picked up is maybe, because of the changes in the MSCI with regards to Adani Group stocks, there could be further weight increase in the bank names. So the financials could stand out as a big beneficiaries of some changes within the MSCI. So that's something to track as far as tomorrow's trade is concerned. Technically above 1700, so Nifty is bulls are trying to defend that particular level, so that's good. But the overall, feedback is there is a bit of momentum in the broader markets, and the fact that the FI selling has reduced to a larger extent, and there is a small MOC basket buying in some select nifty names in today's trade.
Also, Nimesh, maybe in fact if the MSA goes ahead and cuts some weightage in the Adani Group stocks, it may not be such a bad outcome for the market. Absolutely. Because it will get rebalanced with the financial names as well. That could be a possibility that will play out. We'll have to wait by for that. But what about individual stocks? What are you looking at?
Okay, so in terms of individual names, the first stock in my list today is Varun Beverages. A good move in the stock post the quarter 3 numbers, and it's in a big momentum as well. But now I believe there's a very strong indication of a large block deal coming in Varun Beverages very soon. So that's something to track going forward. So that's the first one. Second stock is Jubilant Foodworks. After a long time, some bit of buying traction is back in that stock, and that's actually helping the stock in today's trade to outperform. So largely on back of good flows. That stock is outperforming today's trade. The third stock is PB Fintech. Again, buzzing out of the earnings. The entire the basket has done well for the last few days in anticipation of good numbers, and there is a bit of buying interest as well in PB Fintech. So that stands out in today's trade. I just want to add one word on Paytm. That stock has slipped from day's high, and as I alluded earlier as well, there is a very high chance of a block happening very soon in Paytm as well.
Okay, thank you very much, Nimesh. Interesting list as always. Let's also get in Mitesh Thakkar, who will tell us what you can buy today to sell tomorrow or a reverse trade. Mitesh?
The ONGC is something which has come on my radar. I think that's ending the day with good price volume action. So that's a BTST with a stop about or just below 145. A target of 148, half 149 for tomorrow can be looked at. And the other one is, again, IT name, that's TCS, closing near the day's high. That's a BTST as well. Keep a stop at 35.25 for targets of 35.65 for tomorrow.
Okay, all right. Mitesh, thanks very much for that. 20 points, by the way, is what the Nifty has, 17,895. Ambarish Baliga is joining us for a quick check on things. Ambarish, good to have you with us here. Thanks very much. As always, this MSCI announcement later, of course, which we will react to tomorrow morning. How are you looking at it? We had Jonathan Sheasel earlier who was telling us that maybe a lot of it is in the price, but I don't know how that is, because this is something which no one knows. I mean, how they will look at it, right? It's not as if they said that. Usually what happens is they say the revision is on this date, then they announce the stocks where the changes are going to happen, and then it's effective at some point later. Which is not the case here. What's your sense?
No, because see, I mean, whenever there's a cut in weightage, we will clearly see some selling coming in from the funds which are holding that, and that could be after some period of time. But when that selling actually comes in, that is the time you will have a decent amount of pressure. And before that, when the announcement is finally made, possibly you'll have a sentimental effect on the stocks, just like what we have seen today. So I think there is still further pressure going to be there on the group stocks. So in fact, the sort of up move which we have seen, I've been suggesting at least some of my clients who had bought Adani at those lower levels to possibly book out and at least take home the profits they made in the last few days.
Okay, all right. Hi, Amrish. I wanted to focus on another name. I think you track it, Concord. Year to date, it's been quite an underperformer. I was reading a Nomura note, and they were sounding a little bit cautious as well. But do you believe post this recent underperformance is providing a good entry? If yes, tell us why.
Absolutely, because post the earnings, it had corrected decently well, and that's one of the reasons I started again looking at it. So clearly, Concord is actually a market leader in the CTO business with about 65% market share. Operating about 61 terminals, and the total wagons operated by them is about 16,700, about 27,500 containers, and they are awaiting delivery of 18,000 containers, which is about 60% more than what they have currently. And they can actually, easily work with 60,000 containers to meet the demand. So demand is there. So upside capability is decently huge. And they are also increasing the value-added services, which will actually generate better margins, because what we saw in Q3 was lower margins, but I see margins improving from terminal handling and logistics solutions. And the dedicated freight corridor, I think that's a huge trigger, because volume should actually jump majorly from FY24. As of the 31st January, what we've seen is 17,024 kilometers out of 2,843 kilometers has already been commissioned as far as DFC is concerned. And the other trigger is the PM Gati Shakti framework, which is getting implemented. So like I said, Q3 earnings disappointed, EXIM business dropped, but December has shown some amount of pickup. So after the sort of a correction which we have seen in the recent past, I think at the current levels, the valuation is decent. And if you look at the next 3 years, 2-3 years, I'm expecting a 15% revenue CAGR. Earlier I was expecting 18%, but then I've downgraded post these earnings. And the EPS also I've downgraded for FY24 to 25 rupees. So based on that, my target is 780. But this is also a divestment candidate. So there is a possibility of a premium on this valuation. So as of now, my target is 780.
Do stay on. We need to slip into a very short break. Those are some details on why perhaps Hindustan Aeronautics or HAL's margins have disappointed. There is a big jump up that you are seeing in provisions, both on a year-on-year basis and on a quarter-on-quarter basis. So the expenses include provisions to the tune of 810 crore. Big increase seen quarter-on-quarter, year-on-year, and that is depressing the margins this time. EBITDA margins for HAL have come in at about 17.5%. Get into a break, we'll come back, and we've just got about 10 minutes to go for closing. Welcome back. Let's get greater clarity on the Hindustan Aeronautics numbers. Vahishta joins in. Vahishta?
Hi, Reema. Well, thanks for that. Weak set of numbers coming from Hindustan Aeronautics, which is actually a very strong play in the defense indigenization theme, which is ongoing in the country. Their revenues are down by 4% on a year-on-year basis for Q3. But what has been surprising has been the margins front, which has come in at 17.4% versus 24.2% in the same quarter of last year. And interestingly, the company, when they joined us in January, had upped their EBITDA margin guidance for FY23 to 26-27% versus 24-25% earlier. So unless there is something substantial growth that can take place in Q4, it will be difficult for the company to achieve their guided FY23 margins. On a 9-month basis for the ongoing financial year, the numbers look reasonably decent. The revenues are up 11%. The margins have come in at 23.8% versus 22.3% for the same period of last year, while the bottom line is also up by 52%. This I'm talking about for the 9-month basis. Now for the past quarter of Q3, what has been the exceptional items have been the other expenses, which are up and gone up all the way to 441 crores versus 296 crores in the same quarter of last year. Also, the provisions number is higher to 809 crores versus 352 crores in the same quarter of last year. We will be awaiting more details as to what has been the issues or that we can say in the con calls. Back to you.
Vaishya, have they said what are these provisions related to?
We are awaiting for more details on that.
Okay, so nothing in the P&L there. Thank you very much for joining in. Q3 is a miss. To meet the guidance, Q4 is going to be a tall ask. Ambrish is still with us now. Ambrish, are you betting on any of these new age tech companies? Paytm has made quite the move over the last 2 days, last 3 days, from 500 rupees, now 700 plus. Thoughts over there?
No, I think after this run-up which you have seen in the past 2-3 days, I think at these levels, I think it's a bit overvalued. Because showing that EBITDA positive of, I think, about 31 crores in one quarter, I think, I mean, it's questionable to a certain extent. I don't know whether it's from a market perspective. So I think we should wait for a quarter or two to see whether consistently they are showing that or not, and then possibly take a view. So this move, I think, clearly is an opportunity for people to book off. In case one has bought at those levels of 450, 500, I think it's a decent level to book profits.
Okay, all right, Ambrish, always good hearing your thoughts. Thanks so much for joining in, recommending booking some profits on the likes of Paytm, while Ambrish is quite positive on Concord as well. Well, final few minutes of trade, so let's start winding down. It was a good session, actually. At the start of today, we said that the data points coming out there were looking quite good. And it's been a buy on dips today. You know, you got a closure on a 100-point dip earlier today. And if you bought that, you'll be quite happy because the Nifty is ending high with a gain of closure around 30 points. The Nifty Bank underperforming yet again, but par for the course. Suddenly said managed to pull back in the latter part of the session, ending with gains of closure on 70 points. The mid-cap underperformance, though, that was quite startling today because at most of the day, you had more number of stocks that were declining in comparison to the number of stocks that were advancing. From the Nifty pack itself, a few big gainers. Hindalco's numbers look quite good. Remember, post the Novelis disappointment, some bit of good news was awaited, and that's precisely what happened. A beat on both the aluminium as well as the copper business and some mild debt reduction. Street likes that, one of the top gainers on the Nifty. Bajaj Finserv as well went home with gains of closure on 2.5%. And Nimish told us earlier today that insurance and financial stocks, they were well bid today. And that's precisely what happened with regard to HDFC Life. From the lows that we saw in the last 1 week, well, the stock has gained close to around 9 to around 10% odd. On the flip side, Adani Group stocks were losing out. Adani Enterprises, Adani Ports, as well as Hero MotoCorp post the disappointment on the margins. That stock is really under pressure, down close to around 2.5%. And Cipla as well was down close to around 1.8%. That's about the frontline names. But Prashant, what else?
You know, apart from that, Nigel, I have to say that we are closing above the 20-day moving average on the Nifty. So that is interesting because we closed exactly at the 20-day yesterday. I mean, actually to the dot, to the point. And this would be the first closing above the 20-day since the 18th of January. So yeah, I mean, but you know, that was also lasted for 2 or 3 days and then we kind of dipped below it. So we've been kind of under it in a pretty firm way all the way since the middle of December, actually, 15th of December or so. So let's see if we can build on this as we go forward. A few other names, I mean, actually earnings-related moves, right? And MRF is one name which comes to mind. Page Industries, of course, Piramal Pharma. You know, there were gainers as well. Cummins, I guess, on the back of earnings. Trend, there was Sula, there was Campus Footwear, and so on and so forth, both on the downside and on the upside. Pretty vibrant kind of market in the broader space. Rima.
At the index level, though, the mid-cap index is also going to go absolutely flat, and even the advanced decline ratio split right down the middle. 1,400 stocks in the green for 1,400 in the red. Adani Wilmar stands out because in the selling that we've seen in the Adani Group stocks, Adani Wilmar was spared. Remember, it's not a part of the MSCI, indices, standard indices, and that's one of the reasons why Adani Wilmar perhaps was up in the green. So that closes with a gain. Paytm continues to run higher and higher, so it's a 5% up move on that, though the stock has slipped from the day's high. And but Paytm up 5.5%. Nykaa saw some buying that was up close to about 4%. Zomato slipped towards the end it was flat, reporting number later today. Gujarat Pipavav is another one, very strong volume. Stock was up nearly 6%. Other than that, Suzlon saw some buying post numbers. A couple of PSU banks like IOB, Higher and Trade, Bank of Baroda was up close to about 1%. On the losing side, UCO Bank was weak in trade. Bank of Maharashtra, Federal Bank, PNB. So the performance on the PSU banking space was mixed. Many stocks closing up in the green and many in the red. All in all, flat for the markets. The Nifty is going to close very close to that 17,900 mark. We've managed to close above the 20-day moving average, but one level to track from here on will be the 100-day moving average, which is 17,939. We are going to close about 40 points away from that 100-day moving average. There goes the closing bell. The Nifty manages to, eke out some gains, up about 22 odd points. Post-market hours, watch for numbers from HPCL and Zomato. But the big one to track will be the decision of MSCI when it comes to the weightages attached to the Adani Group stocks. They will be rebalancing the MSCI standard indices, and what happens to the MSCI, the Adani Group stocks, that is going to be what the street is tracking very closely. Get into a break on that note. On the other side, Nisha will take over to our Thursday special, The Big Deal.